Hey everyone, welcome to your daily update for Sol and BTC. So we moved up a little bit, built some more longs, came down, took them, moved up a little bit, built some more longs. Basically every time the price goes up, people start longing, then the price goes down. I don't know really whether that's bearish though, to be fair, because they haven't gone up and swept any of the shorts. If we were to take a bigger dump to the downside, normally they do go up and take something from the upside prior to pushing it down. So liquidity is basically just evening out on the daily. So same thing, we could take another dive, go back down and visit the 70s. We have now hit the most important and the biggest break level that exists on BTC. So that 74,466.4 level is now being touched. I guess there's a wee bit of bullish intention if they close above that break level today. There is one time frame on BTC, which is 110-day, which has that break level, is inside the hold. We've hit the break level. Now we may be able to then go up and actually tag the hold as a reverse hold. So it could be like a false rally effectively. So you might get to see a bit of a pump to the upside, take out some shorts, reject off the of what should have been a support hold, which is most likely now a resistance hold, and come back down. So we'll have a look at that chart when we get into the charts, and just got to watch out for things like range trends, because we might be opening on the wrong side of the range trend, and that could stop it from actually being able to get back up. So yeah, we'll check all that. Bigger time frame liquidity, if we just zoom right out, look at a year, sure, yes, it's all to the upside. Could we rally up to 150? Yeah, we could. There is a close today on Sol as an example that will be creating a reverse trend. We haven't actually hit the break level, so as long as we stay away from that 95.2 area, we haven't technically hit the break level on the really high time frame for Sol, and it might actually go down one more dive, hit the break level, hit the range trend, and then actually push up off the range trend to go target the top side hold, which could get us a move, into the 142 to 150 sort of area. Conservatively, maybe it goes higher if it digs up into the hold, but we'll have a look at that. And but just the closes we've been getting, as you can tell from the last few videos, we just keep getting bad closes, bad closes, bad closes. And as a rule of thumb, if you're just going to keep getting bad closes, you're just going to keep going down. When intent changes, because they start to engulf, they start to pull the candle back up above key levels prior to close, that sort of thing. And the hardest thing just about where we are right now is it's kind of like a I don't know the easiest way to explain this, but there's just a lot of support here, so absolute tons of support here. These sort of prices have supported things like Sol, particularly for the entire range, and gradually what is happening is we're just coming slightly down into those, which means because they're also tightly packed, the resistance sits really close to the support. So if we close just under it, maybe we only go up $1 or $2. Things like that 106 level, getting back up over 106 actually makes quite a big difference. But then 108 is a resistance level, as is 112. Everything up to about 125. Like I said on a video a long time ago, you just do not want to be under 125 on Sol. If you're under 125, you're just in an absolute bird's nest of support and resistance. So we might crack out the bottom of it and go down if we can break into those low 90s, or we excuse me, or we could bounce. But we'll see what these charts have to say now, and see if we can pick it. So firstly, Sol BTC on the daily. Yesterday we had a little bit of a move up off the range trend and off the origins and off the trend. Basically, there were like three things to bounce off there, but as you can see, it was a pretty weak bounce. Didn't really make it back to anything as far as a daily number. Didn't engulf. We're currently sitting just slightly below the pivot level for the range for the second time that we've looked to close under here. So any kind of close under that 13153, I'd have to class that as quite bearish. And if you see them just sneak it back up into that range again before close, then you could possibly look that there's going to be some kind of rally to the upside. But like I've said several days in a row, we're looking at a daily here, and we're barely bouncing off, the actual reverse range trend, and it's not the first time. So this was our first bounce, so that's usually the one you trade, where we just tagged it for the first time since creation, and then off we go. Could possibly actually even argue that might have been the first one, which was an even bigger move, but the fact that bounced and didn't return to it, didn't break it, kind of polarizes it. So then that would have been quite a safe trade to take. Now that we've hit it this time, we're just kind of rubbing up against it. We're possibly going to close below the range level. And like I've said in the prior videos, if we just zoom out, we're nowhere near the completion of the short on Sol BTC from things like the 3-month level here. So funny thing is we've actually completed some of the dollar value shorts. So some of the big moves that were coming down on BTC and some of the big moves that were coming down on Sol, they've completed. The BTC one actually interests me the most because there's two ways for this Sol BTC to come down and hit this target. One is for BTC actually to go up and for Sol to lag. And if BTC does meet its short obligations whilst Sol sort of stays around this area, then BTC might end up going up, and at that point you could see this coming down without the price technically coming down all that much. But I don't know, that's probably a little bit hopeful. In the scheme of things, this just looks like it's rejecting off a reverse hold. It's created a hold to the downside. It's rejecting off the backside of a trend. It's just and it's in the middle of a whole distribution range. So it just doesn't seem like this is going to recover properly from here. It may just it may have pumps. It may take out some shorts. They'll just all be fake. That's basically what it is. Okay, so let's have a look at the safety assets. Yep, so on the daily, we're just rejecting off the trend again. So we're down inside the interior. It hasn't hard closed. Just want to see what this is. So it's hard closed some of these levels. It hasn't retested them. So, there is argument for this to actually come back down and retest something inside this range, because we've got break levels there that we've broken, but we haven't come down and done the retest of them yet. So that could be and that one there as well, which is quite important. So we've got a broken origin there that hasn't been retested. So yeah, so there would be a case for this to come down. One thing that I was mentioning the other day is that this is how money would flow between things classed as safer assets, so BTC for natives and stables. It doesn't mean that it's going to flow into every risk asset evenly, or so with this coming down and Sol BTC being weak, you might find that this can come down, and what happens is maybe hype goes up, or some other token, Zcash gets another run, or something along those lines. It doesn't necessarily mean every single token is going to go up. So what you would do is you'd look at a rejection here, and you'd look for something that is showing strength and it's got positive structure, like we were looking at ARC last night in the Discord, and it was bouncing off a weekly hold level. So there is one altcoin out of a whole ton that's actually got positive structure. And so when this starts to reject off resistance, then the money is flowing into ARC, so that's kind of what you see there. Okay, let's have a look at the totals. Okay, so price action on the totals. Yesterday we didn't managed to engulf. So that was kind of just one of those little almost closes as such. We created a new resistance trend. We did open on the top side of it, but it looks like it's reversing to try and get back under it. So level of bearish here is variable. You have the possibility of creating a hold here at 2.28, in which case, you know, that's kind of medium bearish. It's not creating a range. It's not. It's a high risk front side hold effectively in the price going down. Now, if we close under the break level, it doesn't really mean all that much because we're still above the origin, we're still above the range trend. So you'd say that that's just adding a little bit of a layer to the bearishness. If we come down and close under this 2.236 area, however, that means the candle is now getting put underneath the trend, underneath the range trend, underneath the origin, and then there is a really big air gap all the way down to more like that 2.04 trillion area. So where that close is quite important, and of course the most bearish scenario is all of the above plus a close under 2.2, and if it does that, then it's also looking to create a distribution range to the downside, and that would be the most bearish thing it could do. Now, yesterday when it didn't quite engulf and just pulled back before the close, that was your sign that, okay, they don't really want to go up. Now, it could also do the reverse of that today. So we've got 1 hour and 51 minutes to go. Maybe it pulls back up inside this candle. And in doing that, it creates the distribution candle to then engulf on the next day. It would still be over the top of the trend. It would be up above the break level if it did all that. So that's when you can start to see, okay, well, maybe they're starting to flip this to make it a bit more bullish. You can sometimes just get a bit of insight by looking at the candle like this and just going, okay, well, do we have confluence? So, you know, this 2.66 has got confluence with the hold level up here. So that might happen before the end of the day if they bring this back up. Choose not to create the engulfment, which is really just that last minute, you know, stuff where they stuff with everybody and they make it look weak, and then, you know, people think, okay, I'm going to open a short, and then, you know, 10 minutes or 20 minutes or half an hour before close, they bring the price back up, don't engulf, bounce off the break, next daily candle comes up to retest the prior broken trend, ends up engulfing, and then starts working through its levels. So don't really think much of that level. Don't really think too much of that top level, apart from maybe the range trends that are up there that it could aim to reject off. But certainly this could be setting up for just a bit of a fake out before the end of the day, and then maybe a push to the 50% level, which would be your grab of some shorts. But I'd expect it then to more than likely reject, because there's not a lot of confluence with these horizontal levels to the top part of the range. Okay, so there you go. Could be bearish, could be bullish. See how it closes, see what they do in the last moments. Right, let's have a look. If we take BTC out of it, and it's not engulfed. So, you know, they've been pretty brutal to alts recently. This could be the sign that they're looking to not be so brutal tomorrow. Now, if it gets back up over this 757.73, then it's actually inside one of the older range brackets, and it'd be a good one for tomorrow because it could retest prior broken trends. It could come up and hit resistance. It could come back up and hit the range trend up there, still reject and go down lower maybe after that, but it might creep back into there. You can see how it bounced off the 1, revisited the 1618, so now it's just a case of does it close back over it. If it closes under it, then it may have another dip, but there's a difference between closing under here and dipping versus engulfing versus fully engulfing versus closing under trend, etc. So there's various levels of whether it wants to be bearish, whether it wants to have sort of a last liquidity sweep and then maybe a move to the upside. And normally the last liquidity sweep, what they will do is they will not create structure that's actually going to keep it down, so then it can actually bounce back faster. So that's kind of like, you know, what you see here. They don't engulf the candle. They come up, they sweep on the top, and then they dump. So they purposely do not make support in here because they want to be able to come down afterwards. So that's yeah, that's what we're seeing there. Right, let's have a look at Sol. So just on the really low time frame, the 15-minute is just rejected off the third level of the range. It's headed back down to test the base. So if it closes under this 99 in the next few minutes, then it might come down a little bit lower and have a go at the bottom hold there. So that's all we're seeing there. What are we seeing on the 1 hour? Yeah, 1 hour didn't really do a proper engulfment. It's fallen back inside the hold. It's come back up to test the hold. This never really got past that 104 level. And it has created an origin down the bottom here. But as you can see, it creates the origin, but doesn't engulf the candle. So this is the kind of fake, you know, move to the upside that just comes back up into the topside hold, and now it's looking to break trend in 40 minutes if that keeps the way it is. 4 hour, so it bounced off an origin, didn't do a full engulfment, ended up don't know about that. It didn't so it's actually got a distribution range in there, and it's done a liquidity grab to the upside. So this might just mean, yeah. So it's just kind of sitting inside that level 1. So if the 4 hour close is below that 98.793, then that's this distribution range over here, which has done a bit of a liquidity grab to the upside, come down. If it closes under there, it might try to push back through. We've done the retest of that hard close range trend, so that's completed now. So yeah, really it just comes down to where it closes in this. Okay, let's see daily. So daily, again, various levels of bearish outcome here. I mean, it could flip by the end of the day, and what it can't do is it can't engulf. So, you know, we've got a yellow candle previously, we've got a blue. It could go up, sure, but there's no support. So if it does go up, it's not creating anything to hold if the rejection, you know, off the trend just sends it back down again. So that would be, you know, if they want to do like a little bit of a sweep to the upside and flip this around before close and have a bit of a fake pump. Alternatively, it's going to end up in some level of bearish close if it closes down like this. So anything under 100.722 would be creating a high risk hold. Anything under 95.843 would be creating making a hold that could create a range. It hasn't tested the range trend yet, and it hasn't actually hit the daily horizontal levels either, which look like they are. Scroll across so I can see the indicator. Cheating. Yeah, origins and origins. So this is where you can get holds that break. If it creates a high risk hold here, pushes down into the origins and the range trend, and then the range trends bounce, they could come through that hold. And then if it can maintain that, so let's say it bounces up here to this 112, which there's a lot of confluence actually for going to 112. So if it does do that and closes up there, then it creates that daily range. So we didn't get it yesterday because it pulled back before close. We can't create an upwards range today, but you can tomorrow. And it's not a lot of confluence with the level 1. Level 2 makes sense. It would be a retest of 119. And level 3 is a bit below the break. Level 4 has a range trend in the way. So all of these levels, though, are broken and still untested. So anything up to 137 is not off the cards. It's just a case of, is there more longs to take? Do they just want to keep going down? Do they do a little pump, maybe come up to 112, bring in more longs, and then go down? So these are all things that you got to think about. The higher time frame stuff is looking pretty bad. Okay, let's have a look at the others. Go. So yeah, things like the 2-day close. These are why the closes have just been so horrid. Underneath the range trend for rejection, underneath the range level, so there was just trying to get back above 104, 105 was always going to be a bit of a mission. And you can see that while the candle was active, and this is the whole thing about levels only matter on close. The rest of the time they do not matter. So it pushing all the way up through that break level, which it was on the wrong side of, is perfectly fine. Hits some resistance, ends up coming back down, closing under the break level, right? So this is a hard close of that. So all that happened over 2 days. Now, where it could get bearish, well, if they bring it down below the origin level, which is 98.339, well, then that gets a lot more bearish. If they close back up inside the break, well, then that could be a little bit more bullish. But you've still got resistance in such close proximity that even closing up over that break level doesn't mean it's going to be able to travel that far. It's got to get back inside this distribution range. And you've got this 112, which is an older level that it could travel back to if it gets up inside that range, and you've got 109 and 114. So basically everything in that area. If it was to do a sweep of the range and grab some of the shorts, because you imagine shorts that entered at a good time, they're up here. People that started to chase, they're in here. People that entered at the bottom of the range, they're in here. And that's why you get things like those 50% retracements, because they're quite often just taking this liquidity from the people that entered too late. And then these ones often are the ones that have either closed their position because they've made some good profits, or they are far enough up that they're not going to buy the price up there. So see that one, but looks pretty average at this stage. Needs to get up out of there. You don't really, it's not necessarily a good thing if it becomes a yellow candle either, because it would create an interior downtrend, and the wick is so long on that it would be under that trend. So the only way to make that a bullish close really is a good pump before the end of the day. Other than that, every scenario there is not good. Okay. Yeah. Stepping it up a notch, the 4-day close might be closing inside the origin, as long as it stays above 98.125. However, 102.3032 is the pivot for the range, and it's back in under the trend. So how high could this go? Well, it could come up here and touch the trend, 109 plus. It's a hard close of the 118 level, so it could go back there. It's a hard close of the upper break levels, around 119. So any of that is possible. in 4 days to go all the way up there, but then probably just pull back down again. Now, the most bearish scenario is they push it down another dollar or so before the end of the day. They close under that origin and they just dump, and that could easily take it, down to these 85s or lower. For this distribution range to complete, so they created the range, they swept the liquidity from the top side, and it's moving through. For it to fully complete, it has to get to $69. So that's still looking pretty bearish. Anything under the 2 normally means that it's going to try to push to the 3 or the 4. So yeah, close up over 102.32 today. Yeah, maybe you could then put your temporary bullish hat on. 5-day. Okay. So 5-day is falling back inside a prior range, which is actually probably a little bit higher up than that. It's probably something like 103, I'd say, would be the range level. This is the normal fib level. It's if it closes under 99, excuse me, 99.916, then we're under the local 3 range level. The 4 is about $86. Now before it, there might actually be a decent little bounce trade that you could take in here. There is actually also a 4-day level down inside here as well. So if I just come back, just go all the way over to the left, you've got this 4-day hold down in here, which is sitting at about 92, 91. So that's quite confluent with the 5-day level. So someone asked on the Discord earlier today whether the 5 days been tested, and yes, it has. The wick has been tested, not quite the body. So you probably wouldn't look to enter at that 92, but down inside here you've got that 4 day. So somewhere, well, not that 92.859 anyway. Plus it's probably going to want to try and complete the short. So why this could be quite a good trade is that if you actually follow this down when it's going down, or if it's going down, then you might find that it comes down to complete the short. The sell pressure is gone at that point, and you would find some form of refined entry. So if you've seen the educational videos or the live streams on how to refine entries, you'd look inside this 5-day candle and you just work down in price and forward in time, down in price, down in time frame, forward in time, and find the refined entries, and then just see if anything kind of lines up with completion of the short, and then look to take an entry and then run it back up to 101. So that's that one, or whatever the 4-day one is. Okay. So yeah, it looks like the 10-day, anything less than 100.412 is definitely bearish because it's under the origin. Anything above could invoke some form of little rally or retest to the upside. We still haven't quite tagged the 3rd range level for distribution either, so we're still looking at that 93, but some of those other time frames are already lower than that, so it might just happen in the course of normal dips. And the 11-day, yeah, I mean, anything under 118 is bearish. We're very much under 118. But it also, there's degrees of bearish here because 95.4 and 93.1 would be even more bearish. Staying above those, yeah, we could bounce and maybe go back to test the origin. So that's possible. There'd be a couple of range levels in here as well, so let's quickly look at those if we can. So yeah, 114 would definitely be some kind of resistance, and then we've got, and 67 is the next range level. And we've got a range inside the range, which is yeah, so that's like that 94, 95 area. Let's just get that one exact because that could be quite important. So what do I want? 174.063 and 205.726. Okay. Yeah, so 92. So you're seeing quite a bit of confidence around this 92 as far as we have a 5-day hold, we have a 4-day hold, all down around that area. We've got this range level which could go all the way back up to 123, assuming it didn't stop at the origin or something like that. You just want to play it safe. If this comes down here and starts to show volume, starts to show a bounce, starts to show decent recovery, it's an 11-day time frame too, so it can take a long time. But if you start to see daily engulfments to the upside after we've tagged this 92.374, then yeah, 114s and 118s and 123s, maybe even 125s, all possible from that structure, assuming it wants to go and grab out some of those shorts. Okay, 20-day. Well, anything below 108 is bearish. It's below the break level. Anything below 100.830 is bearish because it's below the range level that will get created today. If it pulls back up just above that before the end of the day, it might come back up here to test the hold, and that could be confluent with that 119 sort of area being retested and those shorts being grabbed. The break level's down at 85 and the next range level's down at 71. So if it closes under the 100.830, the most bearish scenario that could play out is it just goes up $1, taps that range level, and then starts traveling down here to 71. Okay, 22-day. Anything below 103 is bearish. It's got confluence with hitting the $78 break level as level 2 of distribution. So that's the kind of chart you look at and you go, uh-oh, this thing doesn't make a move to the upside and then come down. And then there's also a bigger range in play, which started all the way up here at 199. You can see it rejected 199, came down, closed under 165, pushed up to do a little bit of a pump, rejected the 165. So the 165 level then goes to the 111 level. The 111 level, yeah, maybe it sweeps up through that as part of the bigger range that's in play. And that could be taking out your shorts. It's like this thing's under every single high time frame origin now, which is also very bearish. So 112 would be the first high time frame origin, and then 118, 120, 125, 127. So any kind of push back up into that hold, I would just be very careful. If everyone's talking about we're back, we're probably not back. Okay, there's no way for this to be back unless it engulfs that candle, and that means that you've really got to get back up over what do we got, 139 to 148. You've got to be back up over there or you're not back. Okay, and there's also going to be a reverse hold in there at 135, so just good luck. If everyone is screaming we're back, no, we're just pushing up through resistance. And yeah, if this just takes a dump, well, 78 will be the next level, followed by 57 for the greater range, and so on. I don't like this one. It's got $3 down the bottom there. Anyway, don't think that'll happen, but who knows? This is crypto. Okay, what else we got today? Big ones. Let's see if we can find a reason, eh? Let's see if we can find a big reason. Okay, So 44-day, I put this one in the Discord earlier today because this is a bit different. We created a range and we never tapped the range, but what happened is we'd closed inside the other 44-day hold and we'd flipped it into resistance. So I've been talking a wee bit about this lately because we've been building this FibLab dashboard and we're trying to figure out like all the different filters and the various different criteria that exist around price action. And this one here is one that we're integrating at the moment, where this hold flipped because of the closure inside and the hit of the break level. So then it became resistance. We never actually entered the one. We never entered the whole candle. We rejected off the 169, and then we traveled down. Now, if we come all the way back to 2022, what you have sitting over here is actually a reverse hold as well. So, but it went the other way. So this this candle closed up inside, right? Came back down, bounced off the hold, went up through the break, etc. So, and you can see that that acted right here as support one time, and now it's acting here again as support. So, we moved from 169 reverse hold down to 95.827 reverse hold. Great thing to say in hindsight, because to be honest, didn't even have these tools to actually check these types of time frames back, wherever that was, 88 days ago. So, but having this data now, you can see the importance of how that works. So, what's going to happen today? Well, if we hold the reverse hold from 2022, then we might bounce back up to the range level, 124, so there's a bit of confluence there, or any other form of resistance to the upside, and then look to reject. I don't think we would come all the way back up to 173 at this stage, but it is possible because we've never actually gone into that hold, so it is possible. Bearish, well, we've got about an hour and 34 minutes or an hour and 30 minutes, and if they dump below that level, it puts it back into the 22, puts it back into the hold of the 2022 range, so that's getting really bearish. We do have that next range level just based on the one that's being created at the moment, which is down here at $44, and there's not a lot of confluence with that level for any reason, so I'm not totally convinced that we're going to go see $44. We might end up breaking this and creating some other range and coming back down again off something else, but still, that's a pretty bad place for price to be sitting, but slightly bullish that it is above that 95.857 for close. Okay, now what about 98? So based on everything you just seen on the 44-day time, we are inside the hold, the 2024 hold for the 55-day, which gives us this 112 as a possible retest. So we've tapped the origin, we're holding the origin, so this is to some degree at the moment positive. The 98.339 is the key level. If we close under that 98.339, then we are actually closing under a very big origin, very old, very big. And if we close above it but inside the hold, we might get to see that rally, and we haven't actually hit the break level of the local 55-day range yet, so it's showing signs we might get the rally. But just remember, we're rallying from a position of under resistance. Okay. And then I put this one in the Discord today because it's an interesting time frame closing today. We are creating a range to the downside. We're back inside a very, very old range from 2021. So you've got but you've got a range trend, and it's a reverse range trend that's actually getting created today. So what could happen here is we could actually see another dump and maybe down to say 74. That dump down to 74 would be hitting the 1618 of the new range that's getting created, but it would be doing it from the top side of the support. So, if it does come down here and hit that and then starts to rally back up and you start to see positive price action and all that kind of thing, and we start to see decent daily closes, then this could actually get back up into the 142, 150 area, or higher if it goes to some kind of refined level inside the hold. But that's what we're seeing there. And likewise, if it leaves these things alone, doesn't touch them, and tomorrow we just start having some great pump because of a soybean tweet or whatever reason people make up for the price moving up, if it just starts going up, it's left the target down the bottom here to reject from the hold and come back down again. So bearish if it just opens and goes up. Definitely bearish. Okay. Right, and we've got some even bigger time frames, but you just can't really display them. So there's things like a 422-day close today. It's the first one ever that's had a move back inside the range. It's gone back to about 50%. So it's all data stuff. You can see it on the data sheets, but you just can't see it in TradingView. The trend that it's creating will be a first time trend, and it'll be opening on the wrong side of it. So all the signs are there that if there is a rally, it's going to be a rally from the wrong side of trends. It's going to be a rally from the wrong side of range levels. It's going to be a rally from the wrong side of horizontal levels. And you're basically just playing chicken with price, really. It'll go up and eventually it'll hit something and reject off it and come back down. But yeah, there is a lot of important closes today. So yeah, that's where we are. It was Sol. So let's have a look at BTC. Right. I just had a big pause there while I went through and realized I didn't have any of my BTC charts. So looking at the 1 hour, it's so it did a bit of a move to the upside. Did a bit of a liquidity sweep actually. So like just at first impression, liquidity sweep came up, retested prior broken trend, has broken trend, is moving back down, holds already tested, it's not a full engulfment. Looks kind of like it was a bit of a fake out just to go up and actually grab some liquidity from the upper part of the range. Now it's in distribution and it's currently below that 76, so it's a little bit bearish. Could get better before the end of the day, but it's not doesn't have much time. Okay, 4 hour, same thing, sweep of the trend, sweep of the base of the range, full completion of the 4 hour distribution. So started up here, short, 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 down it comes, and swept liquidity, 50% retracement, it's all done. So this is basically just all done. Now it is closing back inside the break level, but not a full engulfment. It has created a new distribution range, which is in here. And we're currently above the 2. So assuming we close over 74, that's okay, but really it needs to get back over 76, 126 before the end of the day for that to get to try and challenge the top of that range. So that's the 4. Daily, yeah, daily's not looking great. It may engulf, high risk engulfment. Below the break levels, anything less than that hold level is bearish. So 76.9 would be, if it sneaks above 76.926 before the end of the day, then maybe there's some change in intention here. But outside of that, if it sneaks below 74.550 before the end of the day, then that's bad. The main one we're watching for is 74.466.4 because that would be that high time frame break level. If it closes below that today, then the intention is definitely to be heading to the downside. All right, so that's the lower time frame stuff. Now let's have a look at some of these bigger ones, which are looking pretty bearish at the moment. So way over here. Okay, so the 2-day distribution range is complete. 75,319. It's bounced off, it looks like a break or an origin, but it's still sitting under another one, so it's just a bad place really. Under break, just toying with that origin. Oh, that's a sol chart. How did that happen? Charts are a bit messed up. Okay, here we go. So under a 2-day origin, just under the trend and just under the range trend. I mean, you can't really get more bearish than that on that 2-day time frame. The only thing would be if it came down here below 75,319. But yeah, closing underneath a trend, a range trend, and hard closing level 3 of the range. Could it do a bounce? Yeah, it could. You can already sort of tell by the wick of the candle that it's done a sweep in both directions. So now it's really a case of it's going to have to break one way or the other. And that close is looking pretty bearish there. Of course, it is, like most days, within a very small percentage of being different. So if it was to push up just a little bit and get back up over the trends, then maybe you'll get that move to the upside again. But at this stage, yeah, $300 here or there can make that thing better or worse. Okay. 4-day. So the 4 days hit the third level of distribution. It hasn't actually bounced back to that 79,870, so that's still technically on the cards if it closes in this area. It could move back up. Of course, it's going to run into trends. There's actually a range within a range. So you've got the older, bigger one here, which goes all the way down to about 66, and then you've got this one on the inside of it, which goes down to about 69. So it's currently bouncing off the 72,987 level of the bigger one, the exterior range. And so if it was, and it is inside that 74,184 of the interior range. So the interior range is already played out between both sides, so 74 to 78. The exterior hasn't, so maybe there is a chance that it's going to push up to that 79.8. And then if we look at the 5-day, well, that would make quite a bit of sense because the bigger range on the 5-day, level 3 is 79.8. So if it pushes up and hits 79, and it hasn't hit 72.4 yet, so if it pushes up and hits the 79.8, then it might then come down to do that lower low. So that's a bit of confluence there. What have we got? Oh, have I frozen? Looks like I might have frozen trading view. All right, here we go. So 10-day. So 10 days hit the break level. Any close below 75,315, very bearish, because that puts it under that 2 level of the 10-day. But any close above that, maybe a push back up to the trend, prior broken trend, because it's lost that trend again. So, and it could push through that a little bit. There is reasons for this to come up. If it closes above that 75,315, it could come up as high as 83.9. But overall, that's still a pretty bearish place for that candle to be, and it can get a lot more bearish if it goes below 75,315. Okay. Yeah, 11 days below the break level, so that's, and it's kind of smack in the middle of the range. So downside targets from this would be 69.7, or the bigger range would be 63.4. And then we start to get to that magic 56 number. And that's that last high time frame short that we have is targets down there at 56. So I honestly didn't think it would be playing out this quickly without them at least going up and trying to take out some shorts and drag in some more longs and make people kind of feel like things are coming back. Because that's the way to get all that liquidity down there, is to get people to think that things are coming back. Meanwhile, we still have a really high time frame short that's targeting that area. So yeah, any close below 76.562 is a break of an origin, and it's pretty bearish. Then we're going to create a new distribution range on the 20-day today. We're inside the hold. So, most bullish scenario is we could go and do a revisit of the hold, which gets you back up to 84, because once you close inside, this could become a reverse hold. There is a high probability that the price comes back up to retest that. The thing that might get in its way, there's a lot of things that can get in its way. So, number one, the old accumulation range, which started back here in October 24. We're back under the level 2. So if we were to tap that 78.6, we could reject off that and then head down to 71. 71 could invoke a bounce back to 78, so there is a possible trade in there as well. The other one, of course, is we could push up into 79 or higher, and then that's the more local range, which then actually would try to push all the way down to 68. So the price could have some pretty decent chop in this area. Looks like they're dumping at the moment on the low time frame anyway. So hopefully they just do a sweep, bring it up before close, but it just looks like Sol's just gone under some pretty key levels. Okay, 22 days below the origin. It's looking pretty bad. It has completed all 4 levels of distribution from the top. So, we're now talking about this prior range is actually pretty much done. But today it looks like it's going to create a new distribution range. And if it closes below the 1618, which is about 81, any sweep to the upside into that range. And sometimes those sweeps can be all the way to the top too. So like I say, just if there is a rally, don't trust it long term. Just like you saw at the top here, created a range, actually go to higher highs, just grabbing all the liquidity, and then we've just hit that 74 target in the last day or so. So now we're creating a new one. So now let's look at the past, because the past is never exactly what happens in the future, but it's a pretty good way of figuring it out. What could happen from here? Well, we can just dump, entirely possible. Or we could come back up here and grab all that liquidity, which would just be a 50% retracement of the 22-day range that is completed now from the top, from August of last year. And if we did that retracement, it would be the liquidity grab of the new range to then continue down to magic number 56, which is where our high time frame level, or high time frame short, last high time frame short is aiming at. It's also the origin that created this entire move. So that's coming down to retest that could make quite a bit of sense. Okay, now 44. So it closed just over 75.068. So it's just toying with these levels now. Over 75, back inside the break. This is the type of thing. Now, it has already rejected off the reverse hold. So closed inside, went up, rejected off that reverse hold. That's about 96. Range level for the accumulation range. We've already technically done a bounce from that 75 up through that 89. So, it's already had one bounce. Not like it has to do another one, but closing up inside 75.068 might add a little bit of fuel to the fire as far as a rally. Closing below it though, that's nasty. If it comes down below here, then it's going to want to come and try and test this hold. There'll be fib trades and stuff you can take once we get down to these levels that are in the 60s, but for now it's it's making a choice as to whether it wants to rally from here or dump harder. And so we've got, looks like that one actually might have played out. So I don't think that's a reverse. It's around that 65 area. So there's other support around there, but it's probably not that. This has fallen back inside the old January 2025 range. It's at the break level. It's under 77. Anything under 77 is bearish. So that's what we're seeing there. And to head off towards 57. So that's looking pretty bearish as well. All right. What else do we have today? We have 110, which I haven't got a chart for, so let's quickly look at it. So this is one of those timeframes that could create a bounce to the reverse hold and a rally, but it is also creating a big distribution range. So let's have a look at this. Roughly here to here. Where are we? Okay, so resistance at 86, and there'd be resistance at the reverse hold, which is top of this blue candle. So around that 90, 93, 94 area. So that the reason this could create a move is that if it does stay over that important 74,466, that break level, it might create a down facing range trend, which would be, you get the gist of it, folks, like this. And that enables it to have one more sweep to the downside, which, everyone would be, this is bearish, this is bearish, this is bearish. And then actually come back up through that to rally up to either the 86 or the 94. So that's one possibility. The other one would be that we're probably bouncing, see if I can get this right. We're probably bouncing off something here, or it can bounce off something here. So 72,050. And our low is 533. I remember shorting from 70k down to that 53. That was the Germany sell-off, supposedly, according to all the people who think that narrative makes price. They told us it was going to happen, and then 4 months later it hit the resistance and dumped. And then everyone pointed at Germany. So this 72 level here, first touch of this range, that could also bounce us back up to that 83 area. So there's a wee bit of stuff going on down here that's getting created today, that's sort of, they're hovering around it today. The only thing I don't like is the fact that they are hovering around it today. So with a 110-day candle, the liquidity sweep could continue down to, maybe even the 60s area before it actually then just pulls back up. So there's a lot of time on that candle once it opens. If they'd gone and tapped it, on the last day and then started to bounce, that would be more bullish. But yeah, there's signs of this area being able to be used to create some form of rally. It just may not be as big as people are expecting. Okay, and then what else is there? Okay, so I have a quick peek at some of these other obscure ones. And all that's telling us is that you really do not want to close below 74,466, or you could create a range off that really big candle. So let's worry about that if it happens. What else we got? Same thing. So all of these are just, when you start looking at these big time frames, they're just all telling us the same thing, and that's that 74,466 is very important. And that's about as big as we can see. If we look at TradingView, I'll just have a quick look in the data sheet and just see if there's anything. No, nothing bigger for BTC that's of any structural relevance. There is a 422-day sol, which is about a 96 level, and it has a high of about 120. So if they keep it above 96, then maybe 120 to 129 would be the biggest time frame range that kicks into play. Right, so that's us. Let's have a look at these other ones. So Tesla's hard closing under the daily origin, so that's bearish. However, it is still above the other one, so it's still technically just in that little middle area there, which has allowed it to just range to the upside and downside while really not actually doing anything. If we look at the weekly, it has hit the weekly range level at 415 from the older range. Now, all that this really says is that if we get a close under 415, then you can expect it to start coming back down into the 300s. We still haven't retested the range trend either. So, and if it continues to stay down here as a yellow candle, it's going to break the actual weekly uptrend support trend, in which case at minimum it's going to want to head to the hold. The wick that's on here is long enough to sort of give it a bounce to the upside first to test the higher hold, but still it would basically just be a retest of prior broken trend into the hold, and more than likely the intention would be to go down. If they want to have a bearish close, they'll just bring this down and close it underneath this 415 level at the end of the week. So keep your eyes on that one. MicroStrategy. Yep, so it hit the 130s, hit the break level on the 130s, and it has closed, or is currently sitting above it, even in post-market, and it's still sitting above the range trend, but it's under the resistance trend. So now it's just in this real tight downwards wedge. You can see like that. So yeah, it's either gonna, if it opens under the range trend or under the break, then just expect continuation and look at the 120s and lower. And if it opens in here, it could stuff around for a bit. If it opens above, then obviously it can go up. It's got reasons to go do some retests now that it's hard closed below these levels, but it's still kind of just stuck in that little wedge for now. The weekly, yeah, and if you get a weekly close down here, it's going to be a hard close of the range trend. It's pretty brutal if it does that. That is the range trend that supported the entire move from what was that from this one to that one. So that was the $500. Yeah, so that was the 5x basically, the $100 to $500 move. So yeah, if it if it loses that range trend, then it's lost that level, and then you'd expect it to come down here, and it's going to want to retest the origins, which are going to be that 125 and 120s. It's looking pretty bearish if it doesn't get out of there. There'll be a trend shift, could bounce, but it may just run up into the resistance levels above and then come down again. Just some other ones, just keeping an eye on. This is Zcash is slowly grinding down into the weekly hold. So you may just want to look to refine this and find some levels inside here and get yourself a bit of a move from 260s back to 300. So that's something else just to keep an eye on. There's ARK was looking, geez, 50% up today. Well, there you go. I said to someone on the Discord the other day, I said, this is looking good. So it's bounced off a weekly hold, created a range trend. You can see the fakeness of the hold that it created there. Like it didn't actually engulf. So this is what I mean by they can come down, but they leave the path open to go up, which is what's happened there. It's flowing through all that. Yeah, so that was looking really, really good. And starting to wish I'd taken the trade on there last night, actually. It wasn't up there. It was, I think it was about 30% up. So it just didn't really want to touch it because it was already sort of pushing through the resistance. But yeah, that's starting to take off. And yep, daily trend straight through the break level. So that's a heck of a pump. Interesting, it's got things like range trends, etc. So it's probably going to pull back at some point, but if it comes back down and closes under the under this level here today, so closing under that 6745 today, might start to pull back down to do the retest of these. That's just powered through there. Yeah, straight through. So that was looking quite good, and not much else that I poked around at, but some of the bigger stuff. Where's that Sol chart? So this is now down below the break level on the 3 months. So this is your overall market cap for Sol. So I think I shared this chart or the link for this chart. So in the Discord, but I think, yeah, shared. So it's probably just worth keeping an eye on this, because figuring out where the shorts are going to stop on Sol, because there's a lot of shorts on Sol, figuring out where they're going to stop is actually quite tricky. But when you look at the overall market cap of it, it's a bit clearer, because you've just got, there's been so much inflation on this token that if you actually look at that, you can see it like it had an amazing bull run. The problem was they just printed so much of it that it when it was up here at these all-time highs for market cap, it wasn't really a substantially massive price gain on the dollar value of the token, because they just printed so many of them and given them to validators and off-sold them to treasury entities and all the other stuff that just basically meant they were printing money faster than people printed the US dollar. So now that it's coming down and it's having these shorts, it really should see these 48.88 and 40 and 38 billion levels, because they are basically just normal minimum obligation shorts. It's come from the wrong side of trend. It's got 2 months to keep on pushing. And it may also be that this area here, particularly this 51.22, just keep an eye on that one for being maybe the thing that actually creates the rally, because that is a 3-month origin level. And we've already gone through the 3-month origin level from a dollar value perspective. So if you look at, and this is just really unnatural. Let's just find that on the 3-month chart. So as you can see here, we've just pushed right through the first touch of a 3-month origin. And that's just really unnatural for that to happen. But it does make sense when you consider that during this chart, they've just been printing this token continuously to the point where it really just didn't make it much above, its previous highs from the last cycle. But if we look at it like this, the actual market cap origin would be this 51.22. So yeah, keep an eye on that. See what happens when we get there, and if everything flips bullish when we get there, then it might be time to, put the bull hat back on for Sol. And it may even line up with just keeping an eye on this as well. So that's your total market cap excluding stable coins. We haven't quite done the retest of the break level on the 6-month there yet. So we're bouncing around these range levels. We could have a market cap rally back up. That could just be take some shorts, etc. And then after we do that, maybe we reject down and we actually hit these levels, and that could be where we actually start to look for a better rally. So see how that goes, and yeah, catch you again on the next one.